Welcome to another exciting episode of the Trading Bell. Today on the program, we shall be speaking to a guest all the way from Dubai, and that is the CEO for EFG Hermes Frontier, Mr. Ali Khalpey, who will be talking to us about the outlook for Africa and how the company is performing in light of COVID-19. But before we dive into this discussion, let's take a look at his profile.
Ali Khalpey joined the EFG Hermes team in 2017 as CEO of Frontier Markets and brings over 20 years of experience in financial services, combining work in investment banking, equity sales, and asset management. In 2013, he co-founded Exotics Africa in London and as CEO built the leading Frontier Markets investment bank with a presence in Nigeria and Kenya. Since joining EFG Hermes in 2017, he has rapidly expanded the firm's global footprint and established businesses in Pakistan, Kenya, Bangladesh, UK, and more recently Nigeria. Ali was educated at Winchester College, England, and graduated with a Bachelor of Science Honours First Class in Economics from the London School of Economics.
Thank you so much for making time for us, Ali. Hope you've been keeping safe. A lot happening in the stock markets across Africa, across the globe. Let's just begin by you walking us through what you do as EFG Hermes.
As a group, we're present across frontier and emerging markets. The history of the group has evolved out of Egypt over 40 years ago. We've expanded into the Middle East over the last 30 years. And the last 4 years has really seen a significant expansion into African and Asian markets. Actually, our first new entry point was actually Kenya in 2017, where we have a business, a brokering business on the ground in Nairobi with 15 people. We've expanded that into Pakistan, Bangladesh, Vietnam, and Nigeria. And we basically offer a full service investment banking service to institutional investors, both on the ground in home countries as well as foreign investors.
All right, quite an interesting time to be in the space, and just describe for us, since COVID struck, how has business been?
I think the initial shock of going into lockdown worldwide was obviously quite challenging. And I think the organization adapted very quickly to working from home with pretty much our entire global workforce, which measures over 3,000 people working from home since the middle of March. And I think we were quite progressive in taking that call early on. Which fortunately the infrastructure we have as a firm has grown fast over the last 10 years enabled us to be on the ball pretty much straight off the bat. In terms of market volumes, the reality is that the clients left trade. So the broking business has actually held up pretty well. I'd say 10 and 15% decline in volumes. Our market shares have gone up in that period given the concentration of liquidity with large players like ourselves across all of our markets, whether it be in Nigeria or Kenya or Pakistan or Bangladesh. So we've seen an increased market share for the firm. The advisory business has clearly slowed down. We've got a number of transaction advisory mandates across Africa. 3 of those are actually in Ethiopia, where the due diligence is just not possible when you're in lockdown.
All right, quite an illustrious run you guys have had. And Ali, congratulations, of course. I saw you actually ranked first and second for the 3rd year in a row in Frontier and Middle East and North Africa. This was research that was actually done by the Institutional Investors Poll of 2020, which really means a vote of confidence for you. What do you have to say about this?
Well, I think the first thing to say is thank you to all of our clients and supporters who really, they're the ones who vote for these surveys, and it's a pretty comprehensive vote done by external institutional investor. To do it 3 years in a row, I think is quite an achievement. We embarked upon this project for Frontier Markets 4 years ago, and I think the main thing is consistency pays dividends, and I think we've been consistent as a firm, consistent as a team. And obviously, hats off to our research team for who this vote belongs. We've had a phenomenal success, and I think EFG has a history of being a long-term investor in these markets. So, I think if you look at all the markets that we operate in across the Middle East, whether it's Saudi or Bahrain or the UAE, obviously Egypt, through tough times, through thick and thin, EFG has always been there.
All right. And Ali, when you look at frontier markets, it has been a very interesting curve. We've been seeing a lot of activity when it comes to inflows compared to the developed markets. From where you sit, what has been driving growth in frontier markets, and what do you see in your crystal ball?
I think if you look at the history of frontier markets the last 8 years, and I've been focusing on Africa for the last 20 and frontier for the last 8 to 10 years. Clearly there was a desire to invest into nascent markets that weren't easy to invest in. I think the ease of investing has changed dramatically. So I think that has certainly led to flows. I mean, to go back 8-9 years ago, to get a custody account in Nigeria was almost impossible. Today, through the use of local custodians, but also through the use of EFG's balance sheet, we're able to facilitate investors getting into these new markets. So I think that's been a game changer, which has led to a lot of interest and flow and activity into these markets. So we saw a very big push into frontier between 2010 and 2014, 2015. We then obviously had the mini financial crisis, collapse of the EM in 15, 16, and we saw some outflows. More recently, I think just given what central banks are doing globally and what the Fed is doing, it becomes very difficult to make the short-term case for frontier markets. Clearly, I think there are two asset classes right now which are doing incredibly well. One is obviously technology, another one is fintech.
All right. And Ali, let's take this conversation forward now. When you look at also the global volatility has actually affected valuations, and this for a large extent has also dampened the investor appetite. And do we see things changing, and what will it take for us to see investor participation going back to the highs we used to register a couple of months before COVID struck?
So I think the first thing is, we look at liquidity, there are different pools of liquidity. So I think first of all, domestic liquidity. And obviously domestic liquidity is now returning. And I think, central banks across Africa and across Asia are following the lead of the Fed, and obviously T-bill rates are declining, and that obviously makes the equity case a lot more interesting and compelling across all of our markets. And certainly we started to see that. I think Pakistan has been the forefront of that transformational change, where we've had a very aggressive central bank policy of rate cuts. We've now got rates around 8% in Pakistan, and that has led to a flurry of activity in the market. So, we've seen the Pakistan market up 40% since the lows of March this year. So I think that's domestic liquidity plays a key role.
All right, Ali, you sit at a very vantage point. Just explain to us, where do you see Kenya? Are we a key country in terms of the market, and where are the opportunities from the investors?
Well, for us, for EFG, Kenya is extremely important. As I said to you at the start, this is our first market that we entered into. We've built the business over 3.5 years. We continue to be very supportive of our business. I think year to date, we're the largest stockbroker now in Kenya, ahead of all of our peers. And, I think Kenya is important to different types of investors. So in a frontier context, it's extremely important. I think Kenya has definitely been a big beneficiary of Nigeria's demise. And I think, the policies that the Kenyan government has instituted has been extremely positive. Your central bank governor has been very transparent, very communicative. And I think, it's been a pleasure to see actually Kenya evolve. And I've been looking at Kenya for over 10 years. So I think Kenya is evolving itself out of being a pure Kenyan story to being more of a regional story. And I think, certainly you've got the champions there, Equity Bank, KCB, not to mention Safaricom, East African breweries. I think the next phase for growth in Kenya is really going to be how Kenya comes out of this COVID scenario. I think we'll be quite fortunate to see that in Sub-Saharan Africa, the impact of COVID has been less significant than other parts of the world that we've seen, especially if you look at the numbers and the casualty rates.
All right. And Ali, just before I let you go, there's been a very interesting trend we've seen also during this COVID time. This has been gold prices have been on the upside. And what do you read in this?
I think gold is in a perfect storm. I think anyone who's followed gold for the last 20 years, this has probably been the best perfect storm for them. You've got central banks injecting massive amount of liquidity. There's no yield on government assets, which means the cost of holding gold, the opportunity cost of holding gold is very low. So if instead of holding $100,000 of treasuries, I buy $100,000 of gold, the opportunity cost of holding gold is minimal because I'm not getting much of a yield on my treasuries. I think the prospect of obviously higher inflation in the future, given that we've pumped so much liquidity into the system, eventually inflation expectations are going to rise, and that is obviously propelling gold to new highs as people look for a potential store of value going forward.
All right. And your parting shot, Ali, when it comes to what do you have in store for investors as EFG Hermes, clearly seeing a lot of interest within East Africa and, of course, Central Africa?
But I think, we've obviously got a number of really high quality companies that operate in these markets. And I think, when we talk about investors, we don't just deal with institutional investors, we deal with a lot of private equity investors. And I think, both groups of investors see the growth trends and the opportunities that are evolving out of East and Central Africa. Specifically, I think, I've mentioned Ethiopia a few times. This is the market which has been closed to investors for as long as everyone can remember. There obviously been some select private equity transactions that have taken place, but clearly the new government, and hopefully the election goes smoothly and Abiy stays in power to continue the reform policy that he's implemented over the last few years. I think we see a huge opportunity for a 100 million people market, whether it's the telecom sector or the banking sector or the brewing sector or the financial technology sector. These are all massively underinvested sectors in Ethiopia. And I think, Kenyan companies will be at the forefront leading that charge. So we know everybody is bidding for telecom licenses. We know that the banks want to continue to expand into that part of the world.
All right. Ali, what keeps you awake at night in light of what's happening across the world?
The most pressing thing on my mind recently is the safety of our employees. Clearly we run a very diverse number of platforms ranging from Nigeria through to Kenya, through to Pakistan, Bangladesh, and Vietnam. I think, COVID has obviously impacted each of these markets differently. Bangladesh, Pakistan have obviously been extremely hard hit, as is our own home country in Egypt. And that has really been the forefront where the safety of our employees and their families has been of a key concern. We've had a number of cases within our various teams across various markets. Thankfully, all of our team members are safe, but also for our children who are growing up in a very unusual and uncertain time. Homeschooling, working from home, lack of homeschooling, lack of social interaction. These are key challenges for society, and I think I think for our employees, especially in some of the more difficult places like Bangladesh and Pakistan, those keep us worried. Same thing with Nigeria. It's a very tough place, and I think we have to hope that this passes soon and we can all return back to normal life and continue to focus on the positives in the world.
All right. Thank you so much, Ali Khalpey, for speaking to us here at the Trading Bell. Welcome to Market Analysis. That sound marks the end of trading for today. And joining me on the program, we have Churchill Ogutu, who is from Genghis Capital. He's the head of research. Thank you so much for making time for us.
Thank you, Abi.
And let's get straight into it, Churchill. A lot of activity happening in the economy. The president recently did make some major announcements on just how the economy has been performing. And he's yet to lift the ban on sale of alcohol that is in the bars, and over and above that, it seems like the economic activity is gradually rebounding.
Thanks, Abi. And from the statement that came last week from the president to the effect that growth has been around 4.9%, I tend to differ from that. And just looking at the statistics that we've had in particularly for the second quarter period, that's between April to June. On Tuesday, we've seen the report from the unemployment from the Kenya National Bureau of Statistics, whereby that print has jumped doubled from 5.2% between January to March, now to 10.4% in between April to June. So that is also another indicator that we can't see a doubling in unemployment rate, and yet growth is somehow more or less steady from the last time that we had 4.9%. People have lost their jobs, and also looking at the consumption, how people are consuming, looking at some of the indicators, be it co-inflation, which strips out food inflation and fuel inflation, has been steady. So that is telling us that even the economic demand has been quite muted.
So Churchill, if I get you right, what Kenyans should expect is at the short term, we're not going to see a lot of, should we say, economic activity at its peak versus what we are currently seeing, which is sort of stagnation in terms of key projects. We're seeing unemployment numbers also tilting upwards. But when we look at the big picture, are we likely to see business confidence fully coming back to the economy?
I think the business environment, there's a huge cloud of uncertainty that is still there, coming from the fact that this whole uncertainty has been brought by COVID-19. We still don't have a vaccine. Of course, Russia made a huge announcement last month, but so far it's been hot air, hasn't been proved to work across the globe. So
still in the trials.
Yeah, still in the trials, yeah. So until we get a vaccine, that is one of the factors that will also catapult even some robust uptick in growth. And what we've seen even in other developed markets, there's been some stimulus injections that were done at the beginning of this pandemic period, that's between March and April period, but that is somehow fading off. And what we are seeing, even there's been some huge significant layoffs in some of the companies.
All right, and still staying with this, Churchill, because for many Kenyans, the reopening of our borders by the international flights resuming signaled some sense of hope, especially for the aviation sector and also the tourism industry, which recently was abuzz with activity when the wildebeest migration was happening down in the Mara.
Yes, primarily I think that what will be boosted in the short term is now the local tourism, as opposed to the international tourism. Why? At least there's that robustness in movement of people, and because of that fatigue that was there once people were somehow locked, that has been lifted, so people can be able to move. So local tourism is the major boost. From international tourism, I still see that there's that fear of second wave contagion, even from the source countries of the tourists. So from that perspective, I don't see a robust uptick in international tourism in the short term. In the near term, in the long term, once at least vaccine has been found, or once even those developed countries where the tourists come from have started getting some rebound activity, even their disposable income starts going up, because right now we are in a survival mode. And if you look at the bucket list of things to do, you find that going to a vacation comes down. It's not top of the list. People are just on survival mode. How I can be able to pay my rent or mortgage, or how can I be able to survive the next day? So once there's that certainty in the growth outlook, even in the global market, that's when you can see some robust vibrancy in the tourism.
All right. Very interesting sentiments there, Churchill. Let's shift gears and talk about how the general market has been performing, that is the stock exchange. We've seen quite a number of activities from several banks releasing their earning results. We've also seen some interesting acquisitions in this period, with which we've seen the likes of Cooperative Bank acquiring Jamii Bora, now converted it into Kingdom Bank. And from the market top gainers this week, you're seeing Cooperative Bank is actually up 11.74%. Talk to us about what this acquisition means for the bank moving forward. And on a general note, has the banking sector been able to shrug off the pandemic lag?
starting from the last question that you've posed and looking at the numbers, because the better part of August is when now we started seeing the first half earnings from the banking sector, of course with other sectors, but in particular for the banking sector. And some key themes stood out for us. One is the level of provisioning. We're still under a huge uncertainty. So most of the banks were now provisioning for bad loans, that the loans that they had even prior to COVID-19, which were good, might turn toxic even in the course of the year. So there was that high level of provisioning by the banks, and that had an impact even in their bottom line. All the banks recorded a dip in profits just because of that perspective. Also, the other issue was reduction in transaction activity. Most people not having disposable income, most people not even going to the branches. So even that level of transactions reduced even in particularly the second quarter period. That's where COVID-19 was quite acute, and that reflected even in the numbers that we saw released up until last week when the last listed bank posted their earnings. So those are some of the key themes that have been playing out. Of course, we're seeing that even most of the banks are trying now to either reduce their costs, and right now there's that movement into alternative channels. And going forward, we are seeing that a level of mergers and acquisitions will now play out. It may not even be in the short term, but in the long term.
Correct.
Now, taking you back to the Kingdom and acquisition of Jamibora, this was announced even prior to COVID-19. This was something that was in the pipeline as early as March this year. So they just concluded it sometime early last month, and that was finalized and has now been taken over by Kingdom Securities.
And finally, it would be unfair for me to end this conversation without talking about aviation. We've seen the national carrier, Kenya Airways, really flying into turbulent times. The airline is looking to actually send home over 650 employees. At the same time, it has cut back on some of its key routes. What does this signal for the airline at that time when it is also in the middle of a nationalization plan?
Well, of course, aviation is one of the hardest hit sectors coming from COVID-19. People are not flying as they used to do prior to COVID-19. So that has been a hit on Kenya Airways. And we've seen even in the last couple of months that there's been a trimming in their staff costs. People have already been laid off from KQ. So that has been a direct impact as organizations start to reduce their costs in this volatile environment. Remember that there was a time that even domestic skies, international skies were shut off from them. So the kind of revenues that they were relying was just on cargo movement. So right now, at least with the reopening up of the skies, be it domestic and also international, so there's that kind of revenue starting to come, but it's still lower than pre-COVID-19. We are seeing that even on a global level, revenues for airlines are estimated to dip by up to 90% from the levels that were there in 2019. So that's a direct hit in aviation sector players, not only in Kenya, but across the globe. So we're seeing that most airlines are starting to either reduce their workers, starting to come up with cost rationalization measures. And that is also what we are seeing even with KQ. And of course, it's coinciding with the renationalization of Kenya Airways. Right now, the stock has been suspended because there was that upbeatness, because Kenya Airways had dipped over the years in terms of the price level. So there was that robustness, excitement by investors just prior to that, and that led to the stock being suspended for 3 months. So that has been in play. So we are just waiting to see. But I think that once National Assembly comes back to resume their sittings, that will be next week. They might now start legislation on how they can better renationalize it. But I expect that this process will be kicked further down the road. So I expect that still another suspension will be extended once these 3 months elapses.
Thank you so much, Churchill, for your great insights. Well, coming up next is Markets 101. Well, time now for my favorite segment, and that is the questions from our viewers. Today we have a question from Tony Evans, who's asking, what does it mean for a stock to be suspended? Churchill, over to you.
Thank you, Tony Evans, for that question that I had alluded to in my earlier presentation. What does this mean, stock being suspended? It happens whenever a listed company has any restructuring news, be it a takeover or be it some reorganization in the company. So because of the price volatilities around those kind of announcements, so the CMA has to suspend that stock from trading so as to reduce those kind of volatile trading. For example, if I may take you back to something that has already happened, prior to the acquisition of Kenol Kobil by Regis Energy, they had to suspend that stock because of some opportunistic investors may come in and distort the pricing. So they had to suspend that stock from trading until that acquisition process came to an end. And that is the same thing that is happening right now, where we are seeing Kenya Airways has been proposed to be renationalized. And we saw a 40% jump in the price just after that announcement came. So to curb uptick in prices, so they had to suspend the share trading in that stock. But ultimately, the investors who own shares in that stock, they will be paid off once the acquisition or this renationalization has already been effected. Thanks, Tony Evans.
Thank you, Churchill, for that very concise and clear interpretation of that question. And we do want to assure the shareholders that their money is still intact. Well, time for us to walk you down memory lane, and that is historical facts coming up. Well, from that's where we bring the show to a close. Many thanks for your company, and remember, you can always engage with us on our social media platforms appearing at the bottom end of the screen. To my colleague and host, thank you, Churchill, for being with us, and let's keep doing this.
Thank you, Abby, for having me to this show.
All right. Well, see you next time here on The Trading Bell.